America is carrying more than $35 trillion in debt. That's over $35 trillion, a number so massive that most people can't even imagine it. And yet almost nobody talks about what happens if this system finally begins to break apart. Because for decades, the world believed one thing above all else: the United States would always survive. Markets crash, America recovers. Banks fail, America recovers. Wars happen, America recovers. That belief became the foundation of the modern global economy. But today, for the first time in generations, cracks are beginning to appear in that foundation. And the terrifying part is this: the collapse may not begin with a giant explosion. It may begin quietly, with the first domino already starting to fall. Right now, millions of Americans are struggling financially. Grocery prices are higher, rent keeps rising, credit card debt is exploding. Families are working harder than ever just to maintain lifestyles that once felt normal. Most people think these are separate problems: inflation, expensive housing, high interest rates, economic stress. But underneath all of it is one massive issue connecting everything together: debt. America has built an economy addicted to borrowed money. Unlike every addiction in history, eventually the cost becomes impossible to ignore. Imagine a man living in a giant mansion, expensive cars, luxury vacations, designer clothes. Everyone around him assumes he's incredibly rich, but behind closed doors, he's drowning in debt. Every month he borrows more money just to maintain the illusion. At first nobody notices because the banks keep lending to him. But eventually the lenders realize something terrifying. He's no longer borrowing to build wealth. He's borrowing just to survive. That's the danger America is facing right now. The US government spends far more money than it collects in taxes every year. To cover the difference, it borrows trillions by selling Treasury bonds. Investors around the world buy those bonds because US debt has always been considered the safest investment on Earth for decades. This system worked almost perfectly. America borrowed money cheaply, expanded the economy, and continued growing stronger. But now something dangerous is happening. The debt itself has become so large that interest payments are starting to spiral out of control. America is now paying over $1 trillion every single year just in interest on its debt. Think about that carefully. More than $1 trillion disappearing annually just to pay interest, not to build roads, not to create jobs, not to improve infrastructure, just interest. Imagine maxing out multiple credit cards and eventually reaching the point where most of your paycheck goes toward interest alone. That's where financial systems begin entering dangerous territory. 4 years, low interest rates protected America from the full consequences of its debt addiction. Borrowing money was cheap. The Federal Reserve kept rates near zero, especially after the 2008 financial crisis and during the pandemic. Cheap money flooded the economy. Stocks exploded upward. Real estate prices surged. Businesses borrowed aggressively. Consumers spent freely. It felt like endless prosperity, but underneath that prosperity was a hidden dependency forming across the entire economy. Then inflation arrived. Suddenly groceries became expensive. Gas prices surged. Housing affordability collapsed. Everyday Americans started feeling something they hadn't experienced at this scale in decades: the rapid destruction of purchasing power. To fight inflation, the Federal Reserve raised interest rates aggressively, and that changed everything. Because higher interest rates expose weak systems. When rates rise, borrowing becomes more expensive. Mortgage payments increase. Businesses struggle to expand. Consumers pull back spending. Banks face pressure. And perhaps most dangerously of all, the cost of America's national debt begins exploding higher. Even small increases in interest rates become terrifying. When you owe over $35 trillion, this is where the first domino appears. Most people believe financial collapses happen suddenly. One dramatic event, one terrifying crash. But history shows something very different. Real collapses usually begin slowly, quietly, small. Cracks form underneath the surface while the public remains distracted. Then eventually confidence disappears, and once confidence dies, systems unravel much faster than anyone expects. Confidence is everything in finance. Paper money has value because people believe it does. Banks survive because people trust them. Governments borrow because investors believe repayment is possible. The moment trust weakens, panic spreads faster than logic. And right now, global confidence in America's financial future is quietly being tested. Countries around the world are slowly reducing dependence on the US dollar. Nations are increasing gold reserves. Some governments are making trade agreements outside the dollar system. China and other global powers are exploring alternatives to American financial dominance. None of this means the dollar collapses tomorrow morning. The US dollar remains the strongest currency on earth. But history teaches something important. Reserve currencies do not stay dominant forever. Before the dollar, the British pound controlled global finance. Before Britain, other empires dominated trade and wealth. Every dominant system in history eventually reached a turning point, and often, people living during those moments failed to recognize the warning signs until it was too late. The terrifying reality is that America's debt problem no longer requires one catastrophic event to create danger. The system has become so overloaded that multiple smaller shocks could trigger chain reactions, a recession, a major banking failure, persistent inflation, political chaos, weak Treasury demand, rising unemployment. Alone, each problem may appear manageable. Together, they can become deadly. Think about the regional bank collapses that already happened in America. Banks that looked stable suddenly failed under pressure created by rising rates and financial panic. Most people ignored those events because the broader system survived. But these moments matter because they reveal something deeper. The system is becoming more fragile. Fragile systems don't fail because of one giant mistake. They fail because pressure builds for years underneath the surface. Imagine a massive dam holding back billions of gallons of water. Tiny cracks begin appearing. Engineers patch the visible damage while politicians reassure everyone the structure is safe. But behind the wall, pressure keeps increasing. Eventually the problem is no longer the visible cracks. The real danger becomes the invisible pressure building inside the foundation itself. Then suddenly one section breaks, not because of one drop of water, but because the structure weakened over time. That's how debt crises happen. And if America's debt situation worsens, ordinary people will feel the consequences everywhere. Higher inflation could destroy savings faster. Housing could become even less affordable. Retirement funds could lose value. Businesses may stop hiring aggressively. Government spending cuts could impact millions of families. Economic fear changes human behavior. People spend less. Companies invest less. Growth slows. Anxiety spreads. The scariest part is that governments rarely solve debt crises early because the political cost is too painful. Every election cycle, politicians promise fiscal responsibility. They promise to reduce spending. They promise long-term stability. Then almost nothing changes. Why? Because solving the debt problem honestly would require sacrifice. Massive sacrifice. Cutting government spending hurts voters. Raising taxes hurts voters. Slowing economic growth hurts voters. Politicians survive by avoiding short-term pain, even if it creates larger long-term disaster. So instead, governments continue borrowing more money while hoping future leaders deal with the consequences. Year after year, administration after administration, the debt grows larger while the system becomes increasingly unstable underneath. And eventually, mathematics takes control. That's the brutal truth about finance. Numbers do not care about politics. Numbers do not care about speeches, optimism, or promises. At some point, interest payments become too large. Borrowing becomes too expensive. Investors become nervous. And confidence begins cracking apart. Maybe not tomorrow. Maybe not next year. But pressure is building. And history has shown repeatedly that powerful nations often collapse financially long before they collapse physically. Rome did not fall in one day. Economic weakness slowly eroded the empire from within. Britain once controlled global finance, trade routes, and massive wealth across the planet. Yet even Britain eventually lost its financial dominance. Every empire believes it's different, while the system still appears strong. That's what makes decline so dangerous. People normalize warning signs because collapse feels impossible, until suddenly it isn't. And maybe the greatest danger facing America today isn't one dramatic crash. Maybe the real danger is slow decline. A future where inflation remains permanently higher, living standards gradually weaken, younger generations lose faith in opportunity, debt keeps growing faster than economic growth itself, a society where people work harder every year, but feel poorer every year. Because collapses don't always look like explosions, sometimes they look like exhaustion. A society buried under debt, while pretending everything is still normal. And maybe that's why this story matters so much. Because the first domino rarely looks dramatic when it falls. Sometimes it's a failed Treasury auction. Sometimes it's rising bond yields. Sometimes it's banks collapsing quietly in the background. Sometimes it's foreign governments reducing exposure to American debt. Small events, technical events, easy for ordinary people to ignore. But together, those moments signal something larger, the possibility that confidence in the system is beginning to weaken. And once confidence weakens, even the most powerful economies become vulnerable. Right now, America still has enormous strengths. The US economy remains one of the most innovative and productive on Earth. American companies dominate technology, finance, entertainment, and global business. The dollar still controls the majority of international trade, but strength alone does not make systems invincible. Debt can fuel growth for years, sometimes decades, but eventually debt stops creating prosperity and starts consuming the future itself. That may be the stage America is entering now, the stage where borrowed money no longer creates real stability, only the illusion of stability. And if historians one day look back at this era, they may not point to one exact crash or one terrifying headline as the beginning of the decline. They may simply say this was the moment when the first domino quietly started to fall, not with panic, not with explosions, but with a slow loss of confidence spreading silently underneath the foundation of the global economy. And by the time the world fully understands what's happening, the chain reaction may already be impossible to stop.